Welcome, boys. Today I'm going to show you just my analysis on gold so far. So on gold we have this level of support over there. Okay, price has not yet broken this level, right? The moment we break up underneath this level, just know we may have an indication for sales. Just an indication. It's not like price is going to sell off. No, it's just an indication that price wants to sell underneath that level, because it's a level of support. Price came here the first time, it bought. The second time it found support and then bought strongly, right? So just have underneath this zone, we could have a correction move, right? So with that being said, today can be like a no trade day. It depends. So I would advise that if you're to trade, you want to wait for price to go above this same breakout zone. If you observe over there above, price came above this area. If you observe, we had the resistance here, then price broke above the resistance and gave us a correction. Now price wanted to push above this level, right? So our zone for entry will be if price goes above this zone. That's where you can enter our buys. But as I've told you so far, the way we know gold loves to take out liquidity. So the previous day's low is over there. Okay, if you go to the previous day over there, the previous day's low is actually way down here, right? So price has to, if it is to sell, it will have to go all the way down here. But also, if I want you guys to observe that price has been making long wicks, right? So this pullback here that you are seeing here, it can go all the way up to there, right? But it can just be a long wick for price to have that continuation push. Because remember, I've told you that on gold, we're expecting, if this bullish momentum is strong enough, I'm seeing a sort of push to clear out the previous highs over there. And also, I want you guys to notice that price on gold follows structure. It loves following structure, right? So it's not something that just randomly starts to sell or buy. No, even the daily time frame, even though it takes days, it follows structure. So we have this low over there. Okay, we had the low over there. This was our low, right? Price came, took out the low, giving us the indication. It corrected, and then once price got underneath this level, it was doomsday, right? It just sold, right? So anything underneath this zone would have given you an indication that price wants to sell. As simple as that. There is no guarantee, there is no what, it just gives you the indication that it wants to sell underneath that level. Okay, also I want you to observe that we had this high, but price broke above the high. This was the indication for buys, right? So if price went above this zone the second time, that's where you could have taken your second bullish entries. Okay, but price never did come above this area the second time to give us that continuation push. Why is the second time very important? Because it shows us that the buyers who were there in the market at the first place, they are now able to re-enter their positions with massive profits, to take massive what? Profits, right? So the same thing is happening over here. I did this analysis I think like a week ago, but this is the daily time frame. So although I can give you the analysis for a daily time frame, I know that it's not something that I would right off the bat advise you to do. So you have this low over there, right? I want you guys to observe this very carefully. So you have this low over here from the daily time frame. What happened? Price came, it broke underneath this low, giving us the indication, okay? And then it had that correction phase underneath this level. Remember, we are selling up to here. What happened? Price never reached this area, this low over there, right? So price never failed to create a new lower low. When price fails to correct to make a new lower low, what happens in most of the cases? It will take out the opposing level, right? It will first of all take out the opposing levels. That's like what happens, like at least 80% of the time it takes out the opposing level, because that means that this level here, this high over there, was weak to take out the previous low for the trend continuation, for the sell confirmations to what, to continue. So I'm expecting that the first TP that you can have for this trade is if price takes out this high. So over like 8k, that will be the first TP, especially if you are trading with a small account. That will be your first TP, right? 8k, that will be the first TP. So in this coming week, I'm expecting some bullish momentum. So let's go to the weekly time frame. So in the weekly time frame, as you can see, price has we had the previous week low over there. Have you guys noticed these small things that most people actually miss? Look at this. Price came to this level. It's resisting to break underneath this zone, right? Not once, not twice, but over 3 times. 1, 2, 3, 4, 5, 6. 6 times price is failing to break this previous week's low. Not previous week, but this swing low, right? This is a swing low in the weekly time frame. This is a swing low. If you observe, after price reached here, it bought massively. Now, when price is resisting to break underneath the previous week low, what happens? We're expecting what? A bullish confirmations, bullish moves on gold. Okay, and if you are more versatile, this trade can go all the way up to here. We can literally sweep up the previous week's swing high, right? So that's around 113. But for me, it's not just about the money, it's about having the patience to hold these trades, right? So as I've told you, um, now the people who understand trend lines, they can draw their trend lines here, okay, and they can see if price has broken any structure. Well, they would say that price has broken the structure, right? But now they'll be looking for like some bit of a confirmation, right? But something like this, they'll be looking for that zone over there where price closed off the week. Okay, so they would buy until price reached this area here, 37k. So why would someone stop buying in this market? First of all, the first reason why someone would stop buying in this market is if they were what, they are taking massive positions and they had already made profit, so they wouldn't care about the overall structure, right? That's why most people, when they're trading, they just go to the daily time frame and then the weekly, no, and the daily and then the H4. It's very rare for someone to go to the weekly time frame and look for positions on gold. It's very rare. Most people are just, actually there are even traders who are just sticking with only like a few time frames. They stick with like the M1, the M5, and then the M15. So they're here, they can be here on the M5 and the M1 looking for positions. Yes, they can make some money. For instance, on the M1, this was an indication, right? Indication, correction, and then price went underneath. So we expect another push, maybe towards this zone. Some good money, right? But the issue with this time frame is that they don't give you the concrete picture. For instance, if you're always taking out these scalping trades, right? These small scalping trades, what happens in the long term is that you'll be missing out on the full pips, right? Because look at this. Yesterday I told you this trade was going to buy, right? I took this position from yesterday, right? How many pips is this from here up to here? How many pips is that? Look at that. Over 77 pips, right? 77 pips on gold. You know how much 77 pips on gold can give you? That's a lot of pips, right? So yes, you may see this trade and you think to yourself, hey, how can I make this money? Well, if you can buy in early, look at this. If you are to buy over there and you take the market all the way to this area here, because these are the previous swing highs and lows, right? So if you take market all the way to there, that will be around 287 pips on gold. 287 pips, just like that. Okay, so what I'm trying to show you is that even though in your M1 chart you may make some profits here and there, you're going to have lots of noisy days, right? Noisy days. So I recommend that you stick with the H1. Lowest time frame that you should go to, especially if you have want to trade, could be the M15. M15 should be like the lowest time frame that you should go, especially if you're trading from the high time frame like the H4. So on the H4, I'm looking for like entries. I'm looking for the market structure. If it's not so clear, I go to the H1. So the H1, let me first remove this previous. Okay. So in the H1, as I've shown you, we have this. We have this swing high that got broken. Okay, price broke above this swing high, giving us the indication, right? So price is bullish above this area. As simple as that. There is nothing to like complicate this. Price is bullish above. This is around, I think. Let me see. This is 4130. So price is bullish above 4130, right? So just set an alert. When price comes above this area, I want to see whether I can take what those buys. Okay, I want to take those buys. Here's something else that you can understand. When price makes a structure like this inside, remember this is a no trade zone, right? We are inside a no trade zone over there. From here, the swing high to the swing low, this is a no trade zone. So there's anything can happen inside this zone, right? You don't have to understand what goes inside this zone. What you want to see is either for price to go underneath here so that we have the confirmation for sales, or for price to go above so that we have the continuation for what? For buys. So this is something that I have seen a lot, that happens a lot, that can help you in your journey when you're trading ICC. So if price makes this structure inside this no trade zone, right? If price makes remember, if you're to buy and price makes this structure over there, right? It makes this structure over here. Okay, it makes this structure. I've seen this structure happen a lot, and I want you guys to understand that yes, it happens a lot, and you have to take advantage of it before price even goes to your area. You can take advantage of this structure, right? So this is what I call a bullish continuation structure, right? You see that price currently is selling, okay, but when it starts to make higher highs and higher lows within the no trade zone, then you can easily take a buy and take the risk, right? For me, I would usually take the risk. For instance, if I was to buy, let me first put, this is a buy stop, right? If I was to put a buy stop here, so that if price went above that area, I would buy. I would instead buy inside this no trade zone. After I have confirmation that this is the structure, then I'll put a stop loss underneath the previous low in that structure, and then my TP would be, to the next area where price stopped during that indication phase, right? So why am I saying this? I'm saying this because most of the time, most people are waiting for price to go above this zone and then they buy. But what happens inside here can give you enough confirmations for you to take the buy, right? You can take a buy position before even price goes above this zone. Why? Because you already have confirmations. So let me first give you an example, right? Let me just give you an example. I want to see an example here that I can show you. I wanted to show you an example that I could show you. What has been extremely bearish for the past couple of like weeks. So I have to take note of that. Okay. So I have something here. As I say, this happens, but it's just to increase your risk to reward ratio, right? So you have that swing low, okay, and then you have the swing high. Remember that the general direction for this week is like bearish. Let's say it's bearish, right? So see that price made this swing high, and then we have this swing low, right? Price gave us the indication. Actually, it starts even from here, right? It starts from there. So as you saw, we have an area of support. Price came here, it bought. We had the correction phase, then we had the indication phase, then the correction, and then price came underneath this same zone, which gave us that bullish continuation, right? But here is the crazy part. Look at this. I want you guys to observe this. This is the H1, right? So we are inside a no trade zone. From here up to here, this is a no trade zone, right? So what happens in a no trade zone is that price usually follows structure, right? But look at this. Price came, it sold, reached here at this area of support, it made a reaction, and then it made a higher low, right? So it made a lower high, right? So I would have been able to take this entry for a sell. If I was in this market, I would have sold here. Okay, I would have taken this sell entry. My stop loss would have been above the wick of that rejection. Okay, so this is like my lower high, right? Inside the no trade zone, I have a lower high. If you guys don't understand what a no trade zone is or what ICC is, you can watch my previous videos. I've been like making most of these videos in my previous, okay, you can watch those previous videos and then you could understand where I'm coming from with this. So yeah, you would have seen that I would have been risking around $200. My TP would have been around 1 to 2, so that's around $600 for this one, right? So This is something that actually happens a lot. I've seen it happen lots of times, especially on the H4. But today we're on the H1. I want to just show you examples on the H1, right? Examples on the H1. Okay, even here, look at this. We had this high over here. Okay, we have this market high. Most of you guys are like, no, that's not a high. But look at that. Price came to this area, it resisted, then it dropped, right? Remember, we are selling here. Then price pulled back and then it sold off. So that's a high. For me, that's a high. Although it's not a swing high, it's a high in its own way, right? So if you observe, look at the price structure as it came above this area the first time, right? We have these higher highs and then higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, until we had that break. But even this was not a full break because we never broke above like the swing, like the wicks. We never broke above the wicks. But the confirmation here that would have come from within the structure, within the higher lower high and then the lower low, right? This is all structure. This is all structure. Because look at this, this is the H1, right? But look at this, we have the indication here, the minor indication, like inside the zone we have an indication. Look at that. Price came above this area, price came above here, it gave us the indication, it corrected, and then you have the continuation. And then what's crazy even is that even price came again above this same swing. What do I call it? Keep calling them swings. It came above this area, right? This was our level of resistance. It came above it, giving us the indication, the correction, and then the continuation. So where would I have taken my buy entries here? Well, I would have taken my entries actually at this zone over here. This would have been my good setup, right? And then my stop loss would have been underneath this low, okay? And then I would be aiming like for a 1 to 2. But the first area that's around $200. And then I would have been aiming for at least a 1 to 2. All these highs over there, that's around $700 for this trade. $700, right? So yeah, that's basically most of the trades that I wanted to show you guys. I hope, in my sincerity, I hope that you learned something from these videos, right? I'm trying to make as much as possible, as many of these videos as possible, so that you can understand ICC better, right? So with that being said, we're currently floating around 2k in profit, okay, from gold. But this trade here, as I've shown you, it will take some good time for me to get out of it, this trade, because this is a very good trade for a buy. So unless I have extra confirmation that price wants to sell, then I will sell. But beyond that, I will first of all have to hold on a little bit longer, because we have this low over here on the H1. Yes, price doesn't look good from the M15 perspective. Price is not looking good, right? It's selling massively, but that doesn't scare me. Okay, I will first of all wait and see what price will give us, because we have to understand that gold loves to take out the opposing side of the story. It loves to take out the opposing side of the story. I think this is what most people don't understand, right? This is what most people don't get. In fact, they don't get that gold will love to take out these people who are holding. And also I want you guys to understand that this position here that I'm holding, it was actually 10 lot, right? I closed like half, actually like 90% of the position. So this is like a risk-free trade, right? So how would I manage risk if I was in such a trade, right? So the first zone, when price went above this area, let's say I was in this trade, right? When price went above this area, okay, that was around 4k in profit, right? Then it reached over 7k, right? It reached over 7k. So the first time that price went above this zone, I would have closed half of my position when price started to retrace, like around 5k. I would have closed like half of this trade, right? And then when price went underneath here, that would have been around 2k, right? So from 5k to 2k, right? So if price pulled back here, that's when I would have closed like another 3/4 of my entry. And then when price went down here, I'll just be testing the waters. So this whole push here doesn't affect me if I have managed my risk well. Look at this whole move down here doesn't affect me once I've managed my risk appropriately, right? So yeah, yes, price is currently selling. Okay, price is currently selling. We have the indication over there. This is an indication move, but you also have an indication above the high. So this is a new indication above the low. So let's wait. But on top of that, we had I wanted to show you guys another trade on US oil, right? US oil, actually I had a trade like previous week. I had a trade on it. And I think, as you can see, US oil has actually been buying aggressively. We had the previous highs over there, which price could potentially be attacking. So these areas over there, these are good zones to offset the massive bullish momentum. So price can potentially reach those areas. Okay, we don't know when, but it can potentially reach those areas. And also, given the Gulf War that we're having with the US and Iran, I'm expecting some good volatility in the markets to come in. But also, guys, I want you to observe that on US oil from the daily time frame, we had a swing low. This could have been a swing low, right? So you have the swing low over there. Price came to this zone and then it sold off heavily, right? Then we are correcting. Now price is above the same zone. So if price manages to cross underneath this zone, we shall be looking for sales on US oil. You don't know you don't know when that will be, but I'm expecting that if price manages to go underneath that zone, I'll be looking for sales, right? Because we have the indication already. We have the indication part. We have the indication over there. The indication was given. The correction is now the one which is undergoing, and then the continuation, right? So how do we know that the correction has ended? We look from the H1 perspective, right? So on the H1, we see that price made this swing high, okay, and then it closed above it. We have the indication. Indication was actually from here. I want you guys to observe. You have to observe these small details because that's what most people miss, right? This is an indication by this candle over there. You see, it's a wick, right? It's a wick candle. It gave a wick, but that's an indication. Why? Is it an indication, really? I don't see it as an indication because it never broke above the previous week, actually. Okay, so this whole move here is just an indication move. But I would have taken, if I was in the market at this point, I would have taken the buy. Why? Because price has already formed higher lows. This was also a higher low, and then it formed another higher low over here. So it would have been like a good trade. If I'm to buy here, if I was to buy here, okay, I would have bought. My first stop loss would have been here. That's around 4K, right? So in my head, I would be thinking, hey, if price fails to break above this zone, right, and it goes to 4K, would I be willing to hold until I reach that 4K loss? If the answer is yes, then I can hold this trade. If the answer is no, then I'll probably have to rethink my entry criteria. Because otherwise, even if I put a tight stop loss like here, that means that I'm not mentally ready for the drawdown that can come from this setup, right? Let's say I was, let me see. Let's say, okay, now let's say this was the swing. Let's say I'd put this as my swing as my swing high, right? So price went above this zone. If you observe over there to the left, price went above this area, giving us the indication. Then it came under the zone. Then it came above the area, right? So where would you have put your stop loss? Look at this. This was the previous swing low, right? Because we have some bit of structure here. This was a swing low. So price ended up breaking underneath this zone, right? So where would you have put your stop loss when price went above your continuation phase? Well, that would have been my buy, right? As usual, that would have been my buy. Stop loss would have been not here, right? It would have been here because this was the only level that had extremely good structure, right? This is not good structure because we broke the previous low. This is not good structure, right? This is not a good swing low. So I would consider this area here to be the closest link I have to a swing low, right? So in my head I'm thinking, hey, if price goes against me by 7k, am I comfortable with the loss that comes with this? If the answer is yes, then I can hold this trade. If the answer is no, then I can simply just quit the whole trading thing. I can just quit the whole trade. For this instance, if I was to buy here with lot size 2.5 and price went against me, let's say 3k, I will not be mentally ready to handle the 3k if I was not able to handle the biggest loss, which is around 7k. So when you're entering your trades, you have to understand that even though yes, you want to make profit, you have to understand that price will not all the time give you that sweet push without any drawdown, right? Because most people that I see when they're trading ICC is that they tend to do this mistake of putting all their hopes in that single trade going above the zone, and then they enter maximum positions without considering the fact that price in some cases, not all the cases, but some cases, it loves to make a small pullback just to test your strength, mental strength first of all, and then how much you have put, right? So you have put maximum lots here. When price went about like 4k in loss, if you had placed like 10 positions, that's around 40k in loss. If you had a 100k account, that's still good, right? But if it went around 70k, would have had like 30k remaining, so would not have been mentally able, okay, to hold this trade, right? And look at this. My first if I was to buy here, my first tip would have been this swing high, right? That would have been around 8k in profit. That's why on gold I'm very heavily interested in buying, because price has not yet reached my swing lows. If you go to the H4 on gold, I told you that price has not yet reached these swing highs over there. Not this one. I mean like the daily time frame, right? The daily time frame is one of the good time frame to look for those zones. So the first zone that I'm seeing is this area over here, right? So price has not yet retested that area like in some good time. So I'm expecting that if we are to have any form of bullish momentum, it will have to first of all break that swing high, because first of all, I've told you that price failed to break that. Look at this was the swing low, right? This was the swing low in the market, but price failed to break underneath the wick, right? It failed to go underneath this zone, not once but 3 times, more than 3 times actually. It failed to break underneath this zone, right? Now when price fails to break underneath this zone, this area that created that how can I say it, you see this previous high, right? It led to the creation of this what low. That means that this area here is not strong enough to take out the previous what bearish structure. When that happens, I'm expecting that price is likely to have another continuation what push. So let's wait and see how this one goes. Okay, I'll be updating you perhaps in the next coming videos, but I've told you that you can set your alerts, right? You can set your alerts above this area here. This is a very good area to buy from. Very good area to buy from, I'm telling you, because we have the best structure at that area, right? We have the best structure at that area. The stop loss will not be here, it will be here, because this is the closest that we have to a good structure. So I'll probably see you in the next video. Hope you guys have a nice day, and yeah, see you soon.